Let's get started because we are recording this just so that you guys know you will all get a copy of this webinar as soon as we're finished, and we'll move on with that.
Okay, perfect. So I think what I'll start by saying is that what I want to do first is educate everyone as far as what has happened to this point. There's a lot of things that have happened, and what I'm finding is I'm going through and explaining the different options and plans that are available for people, is that everyone wants to stop me and talk about one of these plans. In order to create a really good strategy for your company, you need to understand all the options that are available and how they can or can't work together in helping you get through these times. So what I'm going to do is spend a few minutes just educating you on what's out there, what is coming, and what you can be aware of, and then how we might actually be able to utilize that through this. I'm assuming at some point, if we get through everything, which we've taken a whole bunch of information and really condensed it down for you, if we get through all this, we will have time for some questions, I'm sure. We will not have time for everyone's questions. And that's just the sad matter of the fact is everyone has something that they want specific to them. We're going to do our best to help where we can. We'll give you a lot of knowledge. You'll be able to go out and do a lot of this on your own once we give you this information. We're not trying to hold anything back from you. We want to lay it all out so you can go and get yourself taken care of. So anything from either of you two before I start?
Nope, not at all. Let's get in and get some information going.
Okay, so what we've got out there is we've got a number of plans that have come out over a number of weeks. And where I'm going to start is on the easiest level, where a number of weeks ago, SBA basically had declared a disaster through the coronavirus. Because of that, SBA has now released a loan that you can apply to through SBA.gov. This is a special loan, low interest rates. You can apply for it. Can't do it through your banks. And this is really important to understand is normal SBA loans, you go to your bank, they're a nice third-party intermediary between them and the SBA. Application process is easy. In order to apply for this loan, you have to go to SBA.gov. It is a traditional loan, low interest rate, nothing crazy about it. It's just conventional lending. But it is a nice safeguard for people who just want to get some loans right now and are having a hard time. So the one thing I will tell you is that we have heard a lot of horror stories about going through the website and that the site keeps crashing and losing their applications. So it does take time, not that the application is hard, and I'll show you the application a little bit later on, but it's not a hard application. It's just that the site is having a hard time keeping up, so it keeps kicking people out.
Yeah.
So they're on overload right now. So that's the first thing that is available out there. It's called it's the disaster relief loan. And you can just go to SBA.gov and you can find it there. So that's the first loan that's available. Secondarily, what has happened last week, as of last Monday, the Federal Reserve came out, and this is unprecedented, and said, well, we're going to kick $500 billion into the system and allow it to be out there for small business lending. And so they've kicked out $500 billion. They're going to create what they're calling a Main Street loan program. They said it will take up to 2 weeks to roll this program out. It will again be low interest rate, conventional business lending that will be available in the next 2 weeks at some point to financial institutions to lend on. We don't know what the applications look like or what this is going to be, but this is just to give you timeline, knowing that it is coming as an option for you. On top of that, now what they've come down with as of Friday, which took up all of mine and Dan's weekend trying to read and understand and wrap our arms around everything associated with this, is the new stimulus plan that they've just released on Friday that everyone's reading about. There's a number of things in here to be aware of. First, I'm going to start with something very simple. If you have an SBA loan currently that qualifies as a 7A loan, a 504 loan, or a microloan under the SBA loan program, they have said they will cover 6 months of your loan starting with the next payment. They have put $17 billion into this fund to cover these loans. What they have not told us is, do you need to go reach out to your bank to ask for this relief, Or will they automatically just start applying it to your next loan payment if you have one of these loans? So if you have an SBA loan, reach out to your banker. Currently, the disaster loan I just talked about does not qualify as that loan. But every other ordinary SBA loan that falls under a 7A, 504, or micro loan will have the ability to get that 6-month reprieve. And it's not just reprieve, they'll actually pay the loan for you for 6 months. So that's the first thing to be aware of. Secondarily, you're all individuals. You've got individual issues. Some of you are doing okay in this environment. Some of you aren't. The only real relief I see for individuals right now is, one, they are sending out the checks. So the $1,200 for individuals who make less than $75,000 a year, $150,000 if you're married filing joint. So they'll send out $1,200 per adult included in the household, as well as $500 for each dependent under 17 years of age. So that's coming. On top of that, they've also said if you're in trouble with your mortgage on your personal residence, that Fannie Mae and Freddie Mac loans, as well as HUDs and FHAs, all those loans that are backed by those programs, you can go to your lender and ask for a 6-month relief. They will not waive the payments. No one's making the payments for you, but they will give you 6 months of non-payment. They have also relaxed the ability to go in and actually evict people from their homes for non-payment on mortgage and rent up to the next 60 days. I can't remember when the exact date is, but it's 60 days. That'll fall sometime in May. So,
and with that, also, Ryan, I know that there's a lot of states who have also gone out and actively requested from landlords specifically to ease that relationship piece, to understand that they're also giving reprieve from them as lenders or from them as borrowers, but also would call upon those landlords to do the same thing to each of their tenants to be able to make sure it's going, that's going through. But with that also, of course, they're requiring that you actually reach out to your landlords and have those discussions instead of assuming that you're taken care of in those positions, so that you're not as heavily at risk.
Right, absolutely. Thank you. So that takes care of the individuals, pretty much what we're seeing. Business side, there is the SBA relief. Now there's two big components. Well, there's a few big components to this new bill for small businesses that we need to be aware of. First is there is unemployment insurance available for employers that do have to let their employees go. Your employees will be taken care of. So if you have to lay your people off just because these times are hard and you've lost this much revenue and you're in hardship, you can lay your people off. Unemployment has now been extended up to 4 months, and the employee has the opportunity to still participate in your benefit program as an employee. So any benefits they currently participate in, they can keep participating in. The states are going to put them on unemployment. And on top of that, the federal government has come in and said, we're going to add $600 a week to each of these people's payroll. The good and the bad here. One, you know your people are taken care of if you have to lay them off, which is a really good feeling, knowing that, hey, this is not your fault. The world just exploded 2 weeks ago, and it's really not your fault that this is where we're at. The downside to doing this is that what we have to do is we have to now be able to go in and convince these people potentially that they might want to come back to work early, because there is a small loophole in here. Because the Fed is kicking in an extra $600 a month, a week, not a month, a week, a lot of people are going to make more money on unemployment than they are as being your employees. So that's one downside to this, is it kind of isn't encouraging people to come back to work early for any reason. So that's one thing to consider. If you do have to lay people off, the federal part of the stimulus also allows you to go in and take a 50% tax credit on your next payroll tax filings. So what they're basically doing is they're taking out Social Security and Medicare payments for you on your half of payroll taxes. So if you let people go with the remaining payroll you have, you're only going to pay 50% of what you normally would on those wages for your employees on your quarterly payroll filings. And that differs depending on whether you're a weekly, semi-weekly, whatever it is. That credit will be taken when you file your quarterly tax return. So that's out there if you do have to lay people off. If you do not need to lay people off, or if you're trying to fight through this, they have a new loan out there called the payroll or the paycheck. It's called both. It's the payroll or the paycheck protection program loan. They call it the PPP loan. This PPP loan is designed to keep Americans employed. Last week, we had over 3 million people go on unemployment. And what they're trying to do with this stimulus is to just incentivize employers to keep employees working. They don't want to flood the market with just a bunch of unemployed people sitting around waiting for the market to come back. They want to incentivize businesses to keep their employees. And so what the rules state is that if you have less than 500 employees, you qualify as a small business and you can apply for this loan. There's been, I believe, $359 billion earmarked for this loan specifically. It was passed on Friday. It's a new loan program. The SBA has oversight over it, but financial institutions will be the ones actually lending on this. The one caveat, though, is you have to make sure that your financial institution that you bank with is what they call a 7A lender. What that means is you want to go to a bank that actually does SBA loans. Those are the people that are qualified to do it. So you've got SBA qualified financial institutions that can do this, as well as there's other outside institutions that will do some of these loans called fintechs, where there are a few of them that have been, I think there's 14 nationwide that have been approved to do these loans as well. So if your bank doesn't do it, there are some options for you out there and where you get these loans. Now let's get into what these loans are, because this is really important. Remember I said earlier, this is payroll protection. This is not the financial need loan. This is the payroll protection loan. So they're trying to incentivize you to keep your people employed. So what they are going to do is they're going to take a 12-month average of your monthly salaries, assuming you're a non-seasonal business, and they will come to a monthly average salary number. They will take that number and they will multiply it by 2.5. So if you calculate, for example, that your monthly average salary for your company is $100,000, they will take that number, multiply it by 2.5, and lend you $250,000. However, they will exclude certain people from this calculation on payroll. Anyone who makes more than $100,000 a year in the company will be excluded from this calculation. So once they calculate what that average is, less the $100,000 people who make $100,000 or more, under my example, they will lend $250,000. That $250,000 is a loan to the level you keep all of your employees and pay them their payroll during this cycle of time, and they will have an 8-week looking period to look at this that ends on June 30th. As long as you keep your people, do not lay them off, and you use this money only for payroll, rent, utilities, and mortgage payments. If you're only using it for those reasons, and you do not lay your people off, you will get 100% of the loan forgiven. And it then basically becomes a grant. So they are paying you to keep your people on salary because they don't want them in unemployment. So, Eddie, you look like you have a question.
Well, there's just a ton of questions in chat.
Oh, I'm sure it's just blowing up. And that's why I said I've got to get through all this. I told you, everyone's going to want to stop me halfway through this and ask a whole bunch of questions.
You keep going, but I got a lot. So you're doing great. Keep it up.
So what's going to happen now is when we get the funds for this, they're going to do a look back. And what that look back looks like is not only are they going to take your 12 months monthly salary, from what we understand to this point, understand they haven't even released the requirements to get the loan yet. This happened on Friday. This is how we're trying to be as far ahead on this as we possibly can,
Right.
is they are going to have a look back period, and the date they're throwing back is February 15th, is that they're going to look back to potentially February 15th, compare that to your monthly average wage, as well as compare that to what you're paying your employees during this loan period, to make sure you haven't laid a bunch of people off in the interim and are taking the loan with whatever you have left in the organization. So there is going to be some watching here to make sure that you are not laying off your people, that you are using it for payroll. And the nice thing is this is all happening so fast. Some of you might have already laid off some people weeks ago, not knowing that this thing was coming down the pipe. Don't worry, you're not being punished for this. What they are saying is go get your people back. Go get them back, get them on payroll, get them on your salary, and by the time you get your funds, they should be back on full payroll, so that during this looking cycle they're going to be watching you, that you are paying all those people, including the ones that you had initially laid off. So they understand that's happened, but they're saying bring the people back if you're going for this loan.
Yeah.
So that's the PPP loan in a nutshell. I'm going to just check my notes and just see if there's anything else. There's so much in here. We really have condensed an 800-page bill into 21 minutes so far. So I'm pretty proud of how quickly we're moving through this. Other than that, I believe that's everything of major note on this. A lot of these loans cap out at $2 million on the SBA, $10 million on the PPP loan. We've talked about the Main Street loan. I think we've covered the general basics of what's happening here. Dan, do you have any thoughts? Some of the things we want to talk about.
I think there's a handful of things we want to do a little bit of clarification, especially with the PPP loan, because I think most people are interested in that, interested in the support piece that it comes through for the organization with their staff and how things go through that. There are areas and there are things that are included with it. It is not just the wage that's associated with each individual employee. It also includes up to the benefit packages and resources that are being supplied to each person as well as you're going through that. So as you're evaluating and calculating that information, it's going to impact and include everything that's associated with your payroll details. And so pulling payroll reports out of your payroll providers documentation is going to be the best resource to be able to help provide that context of what's going on and how you go through that. And so I think that's going to be super crucial. Also, the clarification, like Ryan said, that with the PPP loan, it can be utilized, that money can be utilized for very specific things, unlike the initial loan that we talked about at the beginning, which can be used just for general function of within your organization. You're borrowing money with the intent of using it to keep your business alive. The PPP loan has very direct purposes of what it can be used for. And to the comment that he directed with it as well is the portions that can be transitioned to a grant are based off of those core criteria of your wages to your employees, as well as there is some minor utilities and rent functions that it can be calculated for and used as well. In the event, like Ryan talked about, that they do a review at the end and they find that those funds were utilized for something outside of it, that will then be transferred into a loan at that point in time. And so making sure you're keeping good context or records of what's going on through that period of time will be super crucial, because they're going to review that and they're going to determine which portion of this will be forgiven and which portion will then at that point in time turn into a loan under up to a 10-year life on that loan at that point in time. Also with that, of course, things that have to be considered as you're going through that is making sure that if you have let go of someone and you decide to bring them back, they can be included as a part of that piece going forward, because you've now brought them back onto your wages. So you don't have to retroactively go back and pay them for prior periods or anything like that. In most cases, they should have received unemployment, which they would have received the benefits that are associated with the unemployment plan at that point in time. And so it's really about making sure that if you do apply for this, that you'll be able to also connect in the future for that rehire and get them back to doing something for your organization. There's also a handful of questions about subcontractors and how those work. And there are some specific requirements that associate with subcontractors. And Ryan, you and I were talking about this a little bit yesterday. I think you had some really good context that we'd clarify with that, but do want to clarify that subcontractors can be included for specific purposes. And so I'll let Ryan talk about that. And I think we'll dive back into, if you're okay, Ryan, maybe some of the previous plan and what was associated with employees going on leave and things from that, because I'm sure everybody has a lot of questions about how that applies with, you know, people out, just up and leaving also because of they're taking some of that 10 or 12-week time off.
Right. So let's define what an employee is. That's the last thing you touched on, Dan, which I think is really important. What an employee is drastically different than what it was 2 weeks ago. So an employee 2 weeks ago was someone who got a W-2 wage, period. An employee now, under definition of getting 1, unemployment insurance, or 2, qualifying for this PPP loan, are the same now. And what those qualifications are they do include W-2 employees, part-time or full-time. It does include 1099 subcontractors, especially where those subcontractors get sole income from your business, which is funny because technically you shouldn't do that. The fact that you are, whatever, they're saying you can be an employee for that purpose, as well as including a lot of our gig economy workers. Some of you are going, what's a gig economy worker? That's your Uber, your Lyft drivers, your DoorDash people. Those are your people who basically are self-employed, but kind of employees at the same time, working for companies doing what they call the gig economy jobs. So all those people are included in your payroll and wages. Expanded beyond that, Dan pointed out, which is really important to understand, wages also includes for your W-2 employees the benefit packages for which they're actually included in. So if you're worried about how do I pay for their benefits, even if I'm getting their gross wage reimbursed, no, this includes their benefits as well.
Okay, guys, real quick, I do want to go through a couple of these questions, and then we should go through what we believe are going to be the requirements to apply for this kind of loan, as well as do you want to show them the loan application as it now stands, Ryan? Should we do that?
Sure, but let me say one last thing and then yes. So the one thing before I forget, because this is important, you can get this disaster relief SBA loan and you can get the PPP loan. You specifically can't, you can get both of them. You cannot use them for the same purpose and the same time period, but you can get both loans. And there's nothing wrong with applying for both loans. Sorry.
For clarification on that, the PPP loan is the only portion that is eligible to be forgiven.
Right.
So if you take the initial loan to be able to help you still pay for employees and things from that standpoint due to economic disaster, that portion is not eligible to be forgiven. And so to Ryan's point, the timeline and the time frame is super crucial as you track it and organize it from that standpoint to make sure that things are being reported correctly and calculated correctly.
Right. So let's run through a couple of these questions real quick. Paul asks, what if you apply through multiple channels for help? Does that hurt you?
They are very specific in multiple places and including the bill that no, it does not hurt you.
Okay, all right. And then it says, will the banks look at us for any other loan for businesses? It says it's generally hard for me to get a business loan, and I'm wondering if this will be just as hard.
So the SBA has come in and said we will be more lenient. What more lenient means, we do not know.
Yep.
With the PPP loan, understand this is not a financial statement or credit-worthy driven loan. This is the one loan that is not, oh, we're dipping into your credit score. We're looking at your financials for years. They're not doing that. They're saying that whatever this application process is going to be much simpler than going through a normal loan process. And Dan's got some thoughts he can share with us through some of his contacts on what some of those asks might be from a loan standpoint. So the SBA is supposed to be a lot more lenient than a traditional loan. The new loan won't be nearly as difficult. Like those requirements are really slackened up and they're really not looking at your financial statements. They're looking at your payroll and some other things.
Yep.
That being said, also with the new federal loan coming out, the Federal Reserve loan, we expect that'll be somewhat lenient as well. On top of that, one thing I didn't mention is the banks after 2008 had their 10% reserve calculations that were required, meaning that everyone blamed the banks for the housing crash of 2008. So the government came in and said, you have to keep 10% of all your assets in holdings and can't lend it out. 2 weeks ago, they said, forget it, just lend it out. So the banks do have more money now to lend on as well, but they're also inundated from every angle trying to handle all these loans.
Yep. Chris wants to know on the PPL calculation with the $100,000 cap on salary, is that is that the entire salary of 100,000 more, or it's just anything over that?
Great question. We haven't seen the application. We have no idea.
Yeah. And I think there, to that point, there's two translations we're seeing. We're seeing some people who are coming out, and this is coming from bank lenders. This is coming from people who are heavily in the financial industry. And we're just trying to, of course, communicate as best from what we've collected from all of them. Some are saying that those people who are over 100 are completely excluded. Some are saying that it's up to that 100,000 and everything else is on the business owner from that standpoint too. And the under 100,000 is included. And so we're hoping to get further clarification when the SBA releases their guidelines. But right now, there's actually not perfect clarification as of yet.
Yeah, yep. James asks, can you apply for the disaster relief loan for each business entity if you have multiple business entities?
From what I understand, the answer is yes, because it is a business loan. It's not tied to the individual owner. So my understanding is yes.
Yeah.
But understand with the disaster relief loan, and this is a caveat that I think is important to understand, is part of the application, they are asking for your monthly revenues. So at some point, they're going to want to see that your revenues took a hit because you took the disaster relief loan. And that's where I'm looking at it saying, if you haven't seen a massive dive in your revenue and you still want to get a loan, this new Federal Reserve Main Street loan that's coming out in the next 2 weeks might actually be the way to go over the disaster loan.
Yeah. Okay. So Rashila asks, what if we need to hire new people due to recent sales? Are these new hires a part of the PPP? Of course, they won't be, because it won't be as of February 15th, right?
And the PPP is based off of a 12-month look back. It's not based off of current going forward into the future. And so, and just of course, clarification on the PPP too. This isn't a loan that's eligible for you to process or apply for as of yet, because they haven't come out with the exact terms on what's going on. The expectation is that by Friday, we should be eligible to actually file for it from that standpoint, but it's still at a standstill.
Okay. And that's where I'm going to throw the caveat out there. Dan said we anticipate by Friday. The SBA was given 15 days last Friday to roll this out. So they've said, to Dan's point, they expect to have this Friday, but this is government. So just because it doesn't come out by this Friday doesn't mean that anything's wrong. They have 15 days to roll this out.
Yep. Yeah. Cliff, that's real quick on the PPP loan. Is the requirement to have all employees back on payroll?
No, and that's to Dan's point earlier. Do you want to reiterate that, Dan, of bringing back in the grace period that you talked about?
Correct, yeah. So of course it's doing the look back as it's going back from that period of time. The expectation with isn't that you're going to go out and rehire these people in the hope that you actually get this loan. The understanding is if people have been laid off, people quit, anything from that standpoint, you can apply for the loan in the event that you're trying to continue to maintain and keep your business moving or keep good quality employees connected to your organization. When you hire them back, or when you're eligible or accepted for the loan, the goal is for you to hire them back, to bring them on as current employees, use that as a runway for that period of time, upwards of 8 weeks, so that you can be able to keep your organization moving forward and keep those people off unemployment. And so if you let them go, the first whiff of what happened and you saw the major downturn in what was going on, you can still bring those people back and still be accounted for as a part of the calculations of what's going on and utilize those funds for the future.
Good. We're cruising through these real fast. Are the business owners' wages calculated in the PPP?
Yes, as long as they are under $100,000.
So we do include business owners there. Yvette wants to know if nonprofits are able to apply for the PPP.
Yes, very much. They have their own stipulation in there. So if you're a 501c3, and I can't remember what the other nonprofits were, but yes, if you are a nonprofit under the certain 501c3s are the most common. We know for sure 501c3s are. If you're not a 501c3, take a look at it and make sure you do qualify, but nonprofits are very much included in the PPP.
Yep, I would assume this is addressed in the 1099. Dwight asks, how about those of us that are consultants that work in front of our clients and organizations? Is there anything in there for us? So
yes.
Yes, yeah, and I would say clearly on that, because I see a lot of questions coming across regarding owner distributions, K1 type of distribution, things like that. All of that is factored in as a part of that eligible piece. If you're a sole proprietor or if you're a single individual from that standpoint, you can file noting with that sort of compensation that you're receiving through that space, The big piece that they'll note through that process, though, is that they're going to confirm there's no double dipping in any way, shape, or form regarding, net income distributions from your K1s in comparison to owner distributions and things like that. So, of course, making sure you're asking and tracking this correctly is super crucial.
Right. Just remember this. I mean, we don't know what the application looks like, but they've taken the definition of wages from this and taken it out to here and said, this is what a wage is before, this is what it is now. So
yeah.
If you're getting paid somehow, odds are we can call that compensation. If you are a contractor if you have a contractor who has multiple jobs and you're just a small part of their compensation, that's a gray area right now to me.
Yeah.
Dan may have some light on that, but I don't know how they're going to take someone who gets a little bit of their income from you and calculate that into the PPP.
I think that, yeah, just to comment on that, I think the point with those pieces too, when it comes to subcontractors is, as Ryan mentioned earlier in the beginning, if a subcontractor, which of course potentially has their own flexible schedule, works on their own time, works for you directly with a specific job or a contract or things from that nature, are already hired for a specific purpose, those people can be included as a part of that piece. The expectation though is if they are working for multiple business owners as subcontractors, the expectation is they are going to apply for themselves, and that the people they're working for would not include them as a part of that subcontractor distribution or request. And so if that you as a subcontractor are getting your work dried up because the person that you work for no longer has work eligible, you would apply for yourself to receive this benefit, not having that employer or that person that you work for apply for you.
I like Jeremy's question. What if we need to fire someone, provided we have documentation, et cetera? Can I fire right now?
The answer is yes. Here's the risk you run. And anyone who's ever fired anyone probably understands this risk. Just because you fire someone and you document it, it's for cause, does not mean that you're not at risk for them going to try and get unemployment and having to battle the state on whether these people should be on unemployment or whether they were technically terminated. That being said, however, understand if you get the PPP loan and you do have to let one of your staff go, or you do have to fire someone, it's not an all or nothing bill. As long as we're not just completely just fire sailing our employees, I believe the percentage is 25%, that we're not getting rid of more than 25% of our staff, the PPP still applies and the loan forgiveness still applies, but they will claw back some of it and turn it into a conventional loan at 4% payable over 10 years.
Because the assumption is those numbers were included as a part of your 12-month calculation, the average that you were running through. Now, in the situation to where you may have had more employees as of recently in the end of the year, which had a larger number than previously, and so your calculations are a little bit off, all of that will be factored as a part of that review process as well.
Yep. So real quick, people are just asking, where do I apply for this thing? So just in summary, if you want to get the EIDL loan, you go to sba.gov. There's a yellow bar at the top. You click that, it'll walk you right through it. But like Ryan said, the site's kind of crashing and getting clunky right now. Somebody mentioned that they had to mail their application in. That's fine. You can do that. It will get there and they'll accept that. For the PPP loan, that's going to go through your bank, right, Ryan? Or one of these fintechs you talked about.
Right. But the bank again.
Banks aren't ready yet, though. Right.
Banks are not ready yet. They're getting inundated with calls, and I'm loving the responses clients are sending me that their banks are sending them, which is basically, we don't know either. Please leave us alone. We love you, but we'll let you know when we know something.
Yeah. Like Ryan said and Dan said, they have up to 2 weeks to kind of figure their stuff out. So you might have to sit around and wait for a second. Okay. So good. Okay. I think we've gotten most of the yep, we've got most of it. So let's go in and let's look at some of the documentation. I know there are other questions. I'm doing my best to get them all, guys, but let's let these guys present some more.
Dan, your information is more important than mine. I mean,
sure.
I was going to go over the SBA.gov loan application just to give you a feel for what it looks like, but I mean, it's just applying for a loan. So Dan, yeah. I think what you have is much more pertinent right now.
Yeah. Before I dive in, Ryan, do you mind going over the 3-day grant that's potentially available from that standpoint and applying for the loans and what that means? Because I think a lot of people are trying to understand how that potentially plays into their decision-making process currently.
Right. You're talking about if you go for the economic disaster loan and you get the $10,000 grant.
Correct.
Yeah. So there is a grant available for $10,000 if you go and actually apply for your disaster recovery loan. The problem I've got with this, and I've kind of already made it obsolete because I think everyone's going for the PPP loan, is that it's an add back, if you will, on the PPP loan if you get these grants. So there is a grant available out there if you get the economic disaster recovery loan that you can also attach and get. But if you're going for the PPP loan, it doesn't help you. It becomes an add back in the calculation. So I don't know if you want to go over more of that, because what I think is 99% of everyone we talk to is going to be going for the PPP loan, and probably isn't going to be messing around with the grant dollars in the SBA loan. If you are going for the SBA loan and they offer the 10,000 grant and you're getting the PPP, know that that $10,000 actually doesn't help you.
Yeah, and I think the only thing to point out with the $10,000 is the $10,000 from the grant standpoint is if you can show proof that of the disaster position within your organization, they're required to pay it out faster and upfront instead of waiting until later. So if you're in that position where you need cash, now in order to be able to continue to operate, it might be a good resort to go down that road. But to Ryan's point, that will affect you as a part of your loan in the future with the PPP function if you do apply for that as well. And so it does in essence not become a grant. It ends up being tacked onto your loan balance that you'll have at that point in time. I also think it's important, crucial to clarify here too. We are doing the best we possibly can to translate this information with as much information as out there. So we're not by any means saying all this is law and this is everything that's going through with it. We're doing the best we can to translate it based off of what we're finding and researching and working through from that standpoint. And so like for the next part, which we're going to be talking about, the SBA 7A loan application, the relief loan application. Currently, of course, as we discussed earlier, there's not exact boundaries on what to expect through that process. There's a handful of lenders, these fintech companies who have partnered with and who have worked through it, who have internal connections, and they're making best assessments based off of how SBAs have been filed previously, based off of what was classified with the EIDL loans as well. And so let's kind of just walk through some of those items just so you can be thinking about this. I'm sure, of course, Eddie will characterize this also in the email he sends out to everybody with a copy of the video so people can start gathering that information. Or we can talk about what potential impacts or implications we can help you through that process as well. But first things first that they are going to ask for, and I think this is also just verification with you as a business, is your articles of incorporation or organization of the borrowing entity. They just need, of course, to make sure that you're a real legitimate organization and process. If you have bylaws or any operational agreements in place, those need to be included as a part of that piece. Of course, they want to verify that you are the business owner. So a copy of your driver's license and context from that standpoint, showing that you're backing that loan and as that connection piece of the person who's borrowing it. They're now going to be diving into your payroll expense. And so they're going to be looking at your IRS form 940 and 941, payroll summary reports with corresponding bank statements. So I guess, again, confirming, hey, we are borrowing this money for this specific purpose. Here's the actual documentation from our payroll provider. Here's actually how that money is cleared from our bank accounts. So in those situations that you're a sole proprietor and taking out distributions, you're going to have to show that proof of that money being transferred from your business account to your personal account and show that recognition of what that purpose was that's going through it. If your payroll summary is not available, of course, employee pay stubs as of February 15th or the corresponding period with corresponding bank statements along with that. Of course, now here's the piece that we talked about as well earlier, which is a breakdown of all your payroll benefits. This can be a vacation, allowance of dismissal, group healthcare benefits, retirement benefits. And so along with that, of course, the one thing that's been brought up, and I think this is a good reference from this standpoint, is if you have an employee agreement or you have some sort of employee manual that shows and recognizes all of the benefits that you make available to your employees, that's going to be contextually provided, as well as the statements from those providers as well. So again, they confirm the amounts that are attempted to be included in this loan processing as they're going through it. In that event also, they're going to want copies of 1099s that were processed for the last year, the people who you're going to be including in your calculations if you're going to be utilizing them. The next big thing, and this is a big part of the process with this too, is certification that all employees live within the United States. So this is actually one of the big parts of this, is that this is an economic relief for the United States. It's not a world relief platform. And so they're wanting to confirm that those people are actually employees, or are employees and people who live in the United States. Along with that, they want a trailing 12-month profit and loss statement Again, of course, to see and show the recognition or change in your income over that period of time, if that's potentially applicable. Most recent mortgage statements and or rent agreement or lease. So in the event you don't receive a statement, having a copy of your lease agreement will be crucial as a part of this. Also including with that, if you have a separate CAM agreement or anything like that that's related to your lease, you want to include that. And then again, ask also potentially for your utility bills. There's electric, gas, telephone, internet, water, anything that associates with that, because all of that is eligible for you to be able to utilize these funds for in order to pay down.
That's a mouthful.
That's a
Yeah,
huge list of stuff,
really
right?
long list.
So before you guys panic and hit the red button and explode, just know this. Like Dan said, when I send out the recording of this, which it will be recorded, I will send out an itemized list of the things we think will be required. Okay, this is not a list that the SBA has come out with, or the president or anybody else. This is a list of what we think will be required based off of what they are currently saying about the loan. And we want you to be as prepared as possible, because remember, there's a line forming, and we want you to be at the very head of that line. That's why you're here at this webinar today, or you're watching the recording. So I would really recommend over the next couple of days getting these documents together, because you'll likely need part, if not all of them, to get this thing rolling.
I like how you said line. I don't think I'd call this a line forming. I don't know what I'd call this, but I don't think it's a line.
Mob mentality, right? It's like buying toilet paper right now.
So one other thing they think that goes along with it too is, this of course is for the SBA 7A, which is the PPP loan, which most people are going to be looking for from that standpoint. To Ryan's point initially, when we first started the conversation, there are other loans that are available that can be used for other functions within your organization. The reminder is those are loans. It is not free money that's available to you to do whatever you wish with. I mean, I guess it is. You can borrow it and do whatever you wish with it, but understand that it is a loan. It's money that you're taking out. It is debt that you're incurring as an organization. The same thing with the PPP loan. As you go through it and apply for these pieces, you're having at the end to show proof. When they come back to look and assess if you actually utilized the $100,000, $200,000, $300,000 that you borrowed for payroll, they want to confirm you actually hired those people back and you didn't end up using that money for something else. If you did end up using that money and they reference that you did for something else at that point in time, they will then turn that money into a loan at that point in time, just the same as they do under the EDIL as well. But no, they're going to be at lower interest rates than what you're going to get in most places from that standpoint.
Yeah, it's up to 4%, right? I think.
Yeah, it's 4%.
But that does call and put some weight on you guys. Make sure that your accounting is in order. Make sure that your record keeping is in order. Have your accountant or your bookkeeper, whoever watch this, make sure they know what to do. We did get asked a question from Scott. We hold webinars every couple of weeks, sometimes just once a month, on topics about how to make your business more profitable. He's asking like those, will you continue to have webinars on this? And the answer is absolutely. As we find out more stuff, our plan is to be as forthcoming as possible with you and to hold as many webinars as necessary. So I apologize right now for inundating your email accounts. I just want to keep you guys up to date as we're finding out more and more. Okay, Ryan, is there anything else that you need to present?
I think we've really covered most of it. The only thing I would say related to the debt that Dan just brought up is understand that money is cheap right now. And there are some businesses that are doing okay still. And there are some businesses that are doing well. And I've got a large number of clients who have debt. When I look at the state of the debt economy over the last 2 years, I've seen a lot of predatory lending out there.
Yeah.
And so this is actually an opportunity to take for businesses that have been trapped in some of these high interest loans that have been coming out looking like conventional loans, to actually go and try and get some funds to consolidate. If their business is doing fine, this is an opportunity for you to go out and try and get some funding that would actually lower your interest rate from 20% to 4%.
Yeah, I agree. Dan, is there anything else you need to say? Otherwise, I'm just going to go through the rest of these questions.
Yeah, one thing I wanted to just address, because I know this ties into this a little bit. Not all employees or not all companies utilize standard W-2 employees or processing and things from that standpoint as well. Some companies utilize PEO companies to help navigate through their process of payroll and maneuvering through things from that standpoint. In the event, from what I'm seeing through that space and what I've read, and Ryan, hopefully you can confirm with this too, PEOs you're on your own standalone, so you're applying as if you were issuing under W-2. So you would need to record and pull that same information from your PEO provider, what payment amounts you paid over the last 12 months, what your last invoice was from them, and what was calculated through that process. That's of course going to include all the benefits, all the taxes, and all the different items that are included with it. You would have to apply for it though. Your PEO will not. And with that too, note with that at the end, if you do utilize and work through that process as a PEO or through a PEO, you are still required to pay that money back in the event that it's not utilized to pay those PEO bills. So the PEO is not subsequent to, taking on that liability that you incurred as a business owner. The money was lent to the business, or the money is being forgiven to the business, not to the PEO provider.
Yeah, good. So in quick summary, and I'm going to go through these questions, guys. I'm trying to get as many as I can. There's 3 or 4 things we're talking about here. The EIDL, the Economic Injury Disaster Loan, you get that through SBA.gov. You can get that now, right? Doing the PPP loan, you kind of have to wait, talk to your banker, make sure your banker is a 7A lender. You can go on SBA.gov, has a list of all of the lenders. You can just see if your bank's on there. If not, you can use a fintech lender. There's 14 in the nation. Somebody's asking, is there a list of those out there that we know of? Have you seen a list, Ryan?
I've seen the list. I don't know where it's at, but you can search it. It's out there.
The SBA website has a list that's available to people that has some, and it goes by state in some cases and things from that standpoint. But I think one thing to know with that too is right now, more than any time, there's going to be a whole lot of predatory lenders that are out there as well who are saying that they are. Also with that too, there's a lot of people who are on the 7A list who maybe issue 1 or no 7A loans in a given year period of time. So make sure that also when you're going down this road that you vet out those people you're working with so that you don't end up getting incurred with additional fees or delayed in your processing because you went with someone who was down the street or you were familiar with who doesn't really have a lot of exposure or experience with this.
And I will say to that, SBA does list on their site their top 100 lenders.
Yep, good.
So that's a good list to start with.
Yeah, and we're also talking about the Main Street loan. So where do you apply for that? I think that's getting lost a little bit.
We don't know. It will, well, no, sorry. It will be applied for through the banks. The banks will be the people who are in charge of this, what the applications look like and when it actually comes out. They said last week that it would probably take them 2 weeks to get this up and running.
Yep, good. A lot of people are asking kind of similar questions. Again, they're just worried about themselves as business owners. Will my wage be covered? What if it's draws? What if it's wage? What if I'm an S Corp? I mean, does any of that stuff really matter? I know we've kind of covered it, but just simply answering that again.
No, as far as we know, this is your wage 2 weeks ago. It's these parameters, and now it's out here. And pretty much everything that is compensation under that $100,000 is probably got a good chance of being covered. Yeah. We don't know exactly what isn't going to be covered. We know some of the things that shouldn't be covered normally that are being covered now. So that's where I'm just like, you're going to be fine, most likely. If you're a legitimate business taking legitimate compensation the right way, you're probably going to be fine when this is all said.
That's exactly right. Real quick, Paul asks, are you guys taking on new clients right now? I've never heard of you and I'd like you on our team. Absolutely we are. If you go to ignitespot.com, you can click right here on the view pricing. That'll take you to a page where you can download our pricing guide to see what we charge for bookkeeping services, for payroll services, or for CFO services, sorry, which is what Ryan oversees, and for tax services. We have in-house CPAs to do your taxes as well. And also, if you guys need help with the stimulus package, we do believe that you'll probably be able to handle most of this on your own. You probably don't need help, but if you're super concerned and you absolutely want the help, we have put together some packages to help you guys out so you can reach out to us on your own. Obviously, our clients would get a little bit of a priority on that list because we need to take care of them. And anybody that is already a CFO client of us will just be getting free help. That's part of your package. We're going to walk you through this and hold your hand and make sure it gets done for you. Okay, so let's see here. Dun, dun, dun. I think we've gotten most of this stuff in. Somebody did ask, if I already have an SBA loan, will that hurt my chances of getting one of these packages? What do you guys think?
They are very specific in saying that no, it will not.
Okay, all right, good. So that's good. And I think, there are so many like random questions in here. In order to apply for PPP loan, do we have to keep making the payroll and rent payments even if we need to make funds available from personal lines? Yeah, I mean, you need to keep paying your expenses, right? And then the loan will be used for those things.
With that statement, though, also in that same position, if you choose to lay off your employees and they transfer over to unemployment or things from that standpoint, those will not be held against you. The goal, of course, is to bring them back. And that's the whole basis of the PPP plan, is to bring those people back if you have let them go. And
Yeah.
so just being careful to watch and think about that as you're going through that process. If you need those people to continue to maintain the viability of your organization, we definitely recommend that you look at your business as a whole to determine if you should be taking on additional debt or if you should be cutting down in other areas to make sure that your business can continue to survive.
Yep. Tony asks, are the loans requiring personal guarantees or collateral?
That's across the board. So the SBA disaster, from what I understand, does not look for the personal guarantee. That's what I understand. This is the first one where a lot of reading's been done over the weekend, so I want to put an asterisk on that and say I believe there are not personal guarantees on the SBA disaster, and I'm pretty darn sure, almost 100% sure, the PPP loan is the same. Don't know what the Main Street loan is going to look like.
Yeah, good. If you guys have any other questions, do me a favor and just ask them in the chat bar. We got a few more minutes with you here. Ask as many as you want. If I've missed you, I apologize. I think though.
I think the only thing I want to clarify with this too, and with the PPP loan, the reason why they're looking at a 12-month comparison is they also understand the seasonality that goes along with people's businesses also. Not everybody's just a standard. Everybody has a consistent workflow and payroll from that standpoint. And so campaigns, seasonality, whatever it is from that standpoint, all of those are being factored and included as a part of that review, which is why they're not just looking at one specific period. They're looking at a 12-month summary and doing an average across that basis. And so think about that as you're going through the application process and determining how much you need and how much you want to work through it. But also remember with it too, you are taking loans. This is all, taking on additional debt. The goal with the PPP, if you have the appropriate documentation, is that it will be forgiven. But understand, if you potentially miss some sort of paperwork in the process, they won't forgive those at those point in times. It becomes debt.
Yeah, good. A few more here. So Kim asks, if we have some folks on shared works and standby, would that be viewed as the same as outright unemployment? So on furlough, essentially, is that what that is saying?
Yeah, so furloughed people are not unemployed people, but if they are furloughed, you would have to bring them back on with the PPP loan. So that's very much stipulated in there. You do have to bring them back on.
Ron says, I still don't understand the medical benefits continuing if we lay off employees.
So if you as the employer are paying for insurance and medical benefits under the PPP loan, that's part of the wage calculation.
Yeah.
So they will take your medical premiums that you as the employer are paying and make that part of the wage. They're not going to take the employee portion, because they're still getting a wage. They're going to have to still cover whatever medical they have to cover, but you as the employer, that's part of the PPP loan.
Yep. Andreas asked, what if we hire in the month? Will the new hires be considered in the PPP loan? No, they will not.
No. It's a 12-month average, as long back as record as you can get.
What forms are required for the EIDL loan, Samantha asks. That's the loan process you were going to walk through, but it's just a kind of a standard loan app, right?
It really is. I mean, it's not many pages. The required forms are 3 very simple pages, really simple. But then there's some attachments after that may or may not be required. So some of the people that are applying are getting through the initial mandated forms in like 15 minutes, but are then getting requests to fill out the additional documentation. Those of you that have filled out the paper form have printed out all the documents, filled out even the forms that they may or may not ask for, and sent in the whole package. So the initial application is very simple, but there's about 7 other additional attachments they may ask for after the fact, which get a little more cumbersome.
Yep. Odell asks, if your business has high income during the period, will that PPP loan still be forgiven?
Yes, like we said at the beginning, this is payroll protection, not income need. So this doesn't have to do with the strength of the company. This is about protecting payroll.
Yep, good. Let's see here. James says, since I can apply for each business entity, will that complicate the process since my social will be asked for in each application? Again, no, because it won't be hitting your personal credit, right, Ryan?
As far as we understand, I mean, it's a fine question. And as far as we understand, that is the correct assertion, because they are trying to look at, especially with the PPP loan, they're trying to salvage each business's employee base. Mm-hmm. It's not like you're trying to get multiple loans for one business's employee base. Each employee base for each EIN will be looked at separately. So especially with the PPP loan, there shouldn't be an issue at all. With the SBA loan, sure, I mean, ultimately it does tie back to the SSN. That's a little bit harder to say that they're not going to connect the dots and say that's too many applications. Possibly.
Yeah, good.
But as of right now, there's no statement that says it's going to be restricted. There is some restricted, but that's on federal employees, and mainly it's based off of senators, congressmen, and the president is really the kind of focus on limitations.
Yep. And again, Colby restated the formula for us to figure how much is available to you. It's up to $10 million. They're going to take the average amount of your costs from February 15th back 12 months. And then they'll multiply those costs by a factor of 2.5. And that's what your loan amount will be available to you. So
the only thing I'll qualify there, Eddie, is they're not going to go back from February 15th for 12 months. What they're saying is it's the origination date of the loan back 12 months. Okay. But they will have a February 15th look back period in here.
That makes sense.
It's how we read it right now.
That's right there, yeah. Okay, I like that. Well, guys, this is the end of the webinar. We will have more webinars coming to you guys. This is a good one. Is the SBA loan for U.S. citizens only? What if one of the majority owners of the business is foreign national on a visa? We know that one.
We do not know that one. You had to give us the last question. We've done so well today. We did really good. From Friday till today, we had that much information, and it stumped us on the last one.
My bad. We don't know, but that's okay because this is developing. Again, we've been on conversations with bankers and lenders all day long trying to figure this stuff out for you guys, and they're all saying it's developing. Regulations are still being built. We're working through this. So I promise you're going to get your recording today of this. You'll get a list of Dan's items he feels will be necessary to apply to get you ready to apply. Along with the recording of this webinar, like I said, and then I will be in touch with you over the next couple days, maybe by the end of the day, I don't know, this thing's changing so quickly, to schedule the next webinar to keep you guys updated. So I think that's it for everything. You guys have all said thank you for coming and joining us today. Again, our company name is Ignite Spot. We do outsourced accounting for businesses all around the country. We do all of your bookkeeping, where we pay your bills, invoice your customers, create weekly and monthly financial statements for you. We also do CFO work with cash flow projections and forecasting, and we do your taxes all under one roof. Thank you so much, you guys. We appreciate you coming, and we'll keep you informed. Take care, everyone.
Thanks, everyone.